Hi, this is Lee Gettess with the weekly vlog for the week of January 4th, 2010. Oh my gosh, it's getting, I must be old, don't you think? Let's first look at the U.S. Treasury bonds here. We look at these on a weekly basis, and as you can see, they broke down hard for about 5 weeks in a row, right in this area here, if you can see where I'm putting the cursor on the chart. Last week was an incredibly small week. Of course, it was holiday trading, which tends to create that. So they could possibly be in a position to blow out to either side this week. This red line right here is roughly the 115.20 area. If they hold that area, which they have so far, if they hold that without going higher, boy, they could really break down nasty. I mean, I think if they go below this low here of 114.16, that they could really go quite a bit lower. The best resistance, actually, should they go to the upside at all, is in the 116.18 to 116.23 area. We have both this green line moving average here that you can see, which coincides with this previous swing low here. And often when a market breaks down below a swing low like that, it's like an old hound dog. It'll come back up and sniff it to see what it did. So that would be pretty good resistance there. So that's roughly what we're looking at for this week in the bond market. Now, in the S&P, we're looking at the E-mini here, which is essentially the same thing. You can see the trend up from March has just been ridiculously strong. Volatility has actually shrunk down quite a bit going into the end of last year, and the bars are so small and crunched together that it's awfully difficult to see. Before we go, I'll blow up the chart and look at it closer so you can see what I'm looking at for the immediate future. But I would say, as strong as this is, we're not really seeing any signs of frothiness. We're not seeing any signs of divergence. I don't think this will end until it either drops back down in the area of this purple line here that you can see below the chart, and then goes back up to test the highs or possibly goes to new highs. If they don't do that and they're unable to back off, the other thing that could top this market out would be a vertical move. I mean, just to go boom, straight up from there. That'd be a blow off and awfully hard to determine where the top is, but that could finish them off also. Until then, trends up. There's not much else to say. Blowing the chart up here, you can see that we've got a little bit of resistance up in this area here, which is, we'll call it 1131 to 1135. I think they could go higher than that. I think the quietness that we've seen for the last couple months, if that turns into excess volatility, could be to the upside. The support for this week's roughly the 1110 area if they're going to continue higher. And again, what I'd really love to see is I'd love to see a breakdown into this area, which is now down in the 1065 area. I doubt they can do that, but boy, I'd love to see that. Anyway, that's what we've got for you this week. If you'd like to learn how you can participate in our short-term trades, which are a little shorter than this weekly analysis, you can give us a call here at 928-855-3728, and we'll let you know how we can go about that. Thanks for looking in. Have a good week trading.